Have to start from the facts. And the facts are that the top 1% in this country are about 12% of earnings in this country, and they're already about 26% of tax revenue in this country. So I think you cannot start from a premise that the rich don't already materially contribute and pay their way. The essence of your argument is a political argument which has some attractions, and we hear that from the response in the audience, but it isn't an economic argument, and this is fundamentally an economic problem.
Sorry. Okay, we are spending £100 billion annually on debt interest, right? Huge amount of money.
Right.
So one of the things I suppose I'm getting at
No, but what I'm getting straight back at you is we don't need to spend that money. So that money has been created as an idea. We're spending that money straight back to ourselves.
My point about the change is that we do need to spend that money now, because that is how we borrow the money from the markets to fund the things that we're funding. One of the reasons why, and I know you're not happy with the sort of economic performance and the performance more generally of the Labour government, one of the reasons why they do have to be conscious of the market reaction to something like a budget is because if they get it wrong, the markets lose confidence and the costs of borrowing then go further and we end up spending even more. So that's why I keep saying, how do you get from A to B?
Well, and so now we're really getting to the root of the question. I think it comes to all of what Rory was just saying, because I think we're operating in different paradigms. I don't think the market should be dictating democratic decisions.
Our country is in trouble, and we need to fund our public services. You guys have got a lot. We're just asking for a little bit of it. A 1% tax on your assets of £10 million or more, or 2% on £1 billion or more, could be about 15 to 25 billion pounds we put straight into our economy. By the way, if you don't do this, we're going to take it anyway. So let's just do it nicely.
The UK economy was in deep recession. Unemployment was 10%. Interest rates were 10%. And the pound was struggling to maintain its value against the Deutschmark. As soon as markets opened on that Wednesday, financial investors piled in to sell pounds to a beleaguered government. Sterling fell, reaching the floor of the exchange rate mechanism. But the Conservative government were deeply committed to the ERM.
We are absolutely committed to the ERM. That is our policy. It is at the centre of our policy. We are going to maintain sterling's parity, and we will do whatever is necessary.
John Major and Norman Lamont ordered the Bank of England to sell $24 billion worth of foreign currency in a bid to prop up sterling, but it was to no avail. A relatively unknown hedge fund manager, George Soros, had spent months shorting the pound, ready for what he anticipated would be the pound's inevitable demise. In a day of frantic trading, the government couldn't keep up with the volume of selling. The Bank of England had to accept whatever price sellers demanded.
This big boy
George Soros had spent months shorting the